Dow Jones repeatedly struck all-time highs during the first full week of November, at one point breaching 27,750 for the first time in its history. However, there's an increasing amount of confusion surrounding phase one of the trade deal that could serve to undermine the US indices in the coming weeks and arguably the rest of 2019. Last Thursday, China had said Beijing and Washington had agreed to gradually roll back some of the tariffs imposed in the last 18 months, a key requirement of the Chinese if phase one is to be signed anytime soon. On Friday, however, Donald Trump sort of put the kibosh on that idea. He said that wasn't the case. He hadn't agreed at all to any kind of tariff rollback, and something that was backed up by his assistant and director of the Office of Trade, Peter Navarro, over the weekend. I think he even just aggressively shaking his head when the issue was raised. The president also claimed that that China wants the deal much more than he does, which is typical Trumpian bluster, but will only serve to harm the relationship between the two superpowers as they try and hash out an agreement. Trump also said that the agreement will be signed in the USA, which again won't particularly please President Xi Jinping and the rest of the Chinese negotiating team, given that a neutral signing ground really was what initially was on the table when the deal was going to be signed at the APEC summit in Chile, which has now obviously been cancelled. To muddy the waters even further, figures like Peter Navarro and White House spokeswoman Stephanie Grisham have been keen to pound the drum of positivity surrounding the deal, despite these arguably negative, confusing headlines, stating the chances of the deal being signed soon are still high, and that there is progress, even if I think Trump himself said that progress has arguably been slower than he would have liked, which, as a note, comes after a week after both sides saying they're ahead of schedule. Again, it's incredibly hard for the markets at the moment to really read what is going on, given that you're constantly faced with these contradictory headlines. So far, it's been a lot of hot air, a little actual action regarding phase one, which was meant to be signed this month, but might now actually be shifted until December, given the way things are going. Now that we're the other side of earnings season, and the Fed probably hasn't got any more rate cuts planned anytime soon, at least not definitely, but highly likely that they won't do anything more in 2019 at least, the rest of the Dow Joneses and the S&Ps and the Nasdaq's sort of 2019 is really going to be defined by what exactly happens between the US and China, and whether or not phase one of this deal is signed. And then even if it is, what kind of state the relationship is in by the end of that phase one, whether there could be a more substantial, comprehensive trade deal going forwards. The Dow Jones' optimism hasn't been dulled too much. It's only pulled back slightly from those all-time highs. However, a few more confusing headlines like this, a few more sessions where it's hard for investors to properly read what's going on, and the Dow's patience might be tested in the next month and a half. For those trying to look past the trade war, which might be difficult, sort of the trade war is to the US what Brexit and the election now is for the UK. There's the latest US inflation figures on Wednesday. There's a two-day testimony from the Fed chair and Trump enemy, basically Jerome Powell. And perhaps the biggest thing would be there's some big Chinese figures on Thursday, including fixed asset investment, that may give a sign of how the Chinese economy is performing under the pressures of the trade war. And those figures tend to have a big impact on the markets, especially since they've been pretty worrying in the last few months.